So you can actually be 100% privately financed by creating a win-win situation for the person that's going to loan the debt. Private money, my first 12 facilities that we own, I got 100% financing on those deals for the purchase price. I got 100% financing for the purchase price. I did not put in a penny into any of the deals that I bought, because what I tell my private lenders is that I will stabilize the property. I will come out of pocket on a monthly basis, annual basis, to make sure that I stabilize this property. And it's going to cost X amount of dollars to do that. So that is my investment into the property. All right. So you can actually be 100% privately financed by creating a win-win situation for the person that's going to loan the debt. Okay. So you've got to learn how to come up with structures, private, like, partnering or debt. All right. I do debt and partnering, but I prefer debt, but actually I really prefer syndication. I really prefer like working with my investors and stuff, but I'll do any deal, honestly. Just give me the money and I'll figure it out. Okay. All right. Private money. Private money is private lenders. Private lenders are going to be your friends, your family, your colleagues, your acquaintances, everything in your circle that's like near you, right? Not strangers. Strangers are not private money. Strangers are funding and syndicating. All right. So, I had exhausted my circle, sort of, kind of, so I was like, look, I'm just going to start me a fund. That way I can really get out there and put my name out in the world, right? Start with your circle. All right. And go from there and just say, look, I'm going to buy a storage facility. How much money you got? I'm telling you, when people ask me like, hey, I'm interested in your fund or I'm interested in working with you, I'll just say, look, how much money do you have? You tell me how much money you have and I'll tell you exactly what we can do with it. I have no qualms with asking people how much money they have anymore, because I need to know so I can figure out how I can help you. You want to get to the point where you can be the source of education for the investors. You can direct them into the right category right here. Okay. The bank financing we talked about, interest rates, down payments, that kind of stuff. That's all right here. Conventional loan, SBAs. And then creative deal structures, other ways to structure your deal. So for instance, like I just got off with the guy that wants to join Turnkey Acquisitions. He is an investor that focuses on residential right now, and he wants to get out, but all the properties, pretty much most of the properties that he's ever bought are subject to, right? I don't know if anybody's ever heard of the subject to, right? Which is typically a residential creative deal structure, right? And guess what? You could do those for a storage as well, too. You can do it for any type of property. You could do a subject to for land, commercial, storage, anything that you want to do, if you understand the concept. Whoop. Not the last property that I bought, but the property before that, in May or April, I can't remember. Anyways, we assumed the loan. And so now this loan assumption, a lot like, banks right now, they're not going to do loan assumptions because the loan is at 3% and now it's 10%. So they're not going to let you assume any loan. So this does not work with bank financing. All right. Especially right now. Right. But if it's owner financed, it's already being seller financed. Why can't you just assume that loan? We talked to owners up in New York. They got the deal owner financed. We're like, look, let us just assume that owner finance deal. We'll start, tell the owner to meet us. We'll start taking over those payments and we'll give you the chunk of change after that assumption. right? That was like 700 grand and he was up 400 grand. And so we'll give him 300 grand or something like this. And then we'll assume that loan. So the down payment is flip flopped. It's not for the down payment of the purchase. It's really the payment for the loan. And then we're a payment for the purchase. And then we're assuming that loan. Right? There's so many different structures. I'm not honest, I just like love coming up with structures, you know. So, but like you need to understand all of the creative deal structures out there so that when you do come across certain types of scenarios, you can think outside the box. You don't want your buy box to be so small. You want your buy box to be big. Think outside the box and make your buy box bigger. That is your goal. That is your job for the next couple of years so that you can acquire property. And everything that I'm telling you right now could be for residential, land, commercial, storage. It's just real estate in general. We all know that the market sucks and it's not going to get any better because it takes a couple of years to correct itself once we even stabilize. So according to the Fed, they're supposed to do another interest rate hike by the end of the year, right? So that means it's going to take the next 2 years to really stabilize everything. And so this is the time when this comes into play, right? Is right now. So you've got to educate yourself on this stuff. Hey everybody, this is Stacy here. Thank you so much for watching this video. I am here to teach you how to get your foot into this industry. You're watching this video because you want to learn how to get started in self-storage investing, or maybe you own facilities and you want to be a better manager, a better owner. That is what I do, is I teach people how to do that. So please like this video and also subscribe, hit the subscribe button, because that's what YouTube wants. So in order for me to get out the word on how to get started in this industry, I really need your help. Again, I appreciate you listening to me, and I'm here to help you on this journey, and I will see you in the next video. Take care.